Those of you who are longtime viewers of this channel know that I have an underlying theory about Tesla that forms the underpinnings of my entire investment strategy. It is the 2026 theory, and it comes down to what you believe about the future. What do you actually believe strongly about the future? And when those future events are unknowable, it's possible to put percentage chances on all of these things. Here's what I believe that causes me to have a substantial position in Tesla. Being almost 76 years old, it would be unwise for me to be all in. I have real estate and very conservative investments and pensions. Your situation is your situation, but if I was 50 and all in, this theory would still hold true. Number one, I believe electric cars are the future. Moreover, I am convinced that by 2026, the vast majority of people who have any sense at all will be planning to buy an electric car as soon as possible. The sticker at that time will be lower than an equivalent ICE car. The safety, performance, and cost of ownership will be better, as they already are. There will be plenty of range and plenty of way more charging stations. And most apartment dwellers and condo owners will have access to charging overnight, just like homeowners do. So the decision will be easy. If you believe that, that would be number one of the considerations about the future. Number two, Tesla is at least 5 years ahead of virtually every aspect of electric car tech and manufacturing capabilities than the competition. So it will be the leader in dollars, if not units, for years to come. I think BYD might be the leader in units, but Tesla might catch them and go ahead. It doesn't really matter. What matters is Tesla will be the leader in dollars and profits by a lot. If you believe that, that would be number two in your combination of items that you would think about. Now, do you think that, what percentage chance would you put on that? Number three, FSD will be complete by 2026. Okay, this is 2024. By 2026, it will be complete. So it means we might have to wait another 2 years? No, it could happen tomorrow. I'm saying I put a very high percentage likelihood that it will be complete by 2026, and that will allow robotaxi to start generating income. What percentage would you put on that? If you think that's a 75% or 60%, what do you think? Number four, Optimus will be scaled up and offered for rent to manufacturing, construction, retail, distribution centers by 2026. I think it's going to start being offered to consumers by next year. That's what Elon Musk believes. So throw it out another year. What do you think the odds are that Tesla will be manufacturing the robots by 2026 and at that point selling, let's say 100,000 a year, a million a year? I don't know. 100,000 a year would be massive, massive profits. Number five, the semi-truck will be ramped up to its first phase production levels by 2026. I'm calling that 100,000 a year. The semi-truck, what odds do you give? Since the building is being built now, probably that means about a year from now, they'll start rolling them out. So next January, they'll start rolling out those semi-trucks. Do you think that's a very high likelihood? Do you think that they're planning to make 100,000 a year? Do you believe the market will be good for 100,000 of these a year? If you give that a percentage by 2026. Number six, the Gen 3 vehicles will be ramped in at least 2 factories, maybe more in 2026. Well, the Gen 3 vehicle was just announced by Tesla to be starting to make it in mid-2025, maybe late 2025. What odds do you give that? Well, if they started in mid-2025, late 2025, how many will they be making in 2026? 500,000? Okay, whatever number you want to put on it, but by 2026. Number seven, Cybertruck will be ramped up to over 250,000 units by 2026. Elon Musk says that's kind of the bottom number they're expecting to do. The ramp hopefully goes well this year and into next year. What chances by 2026 do you give that Cybertruck will be producing 250,000 units per year? Now, remember, that is worth 500,000 Gen 3s because of the price point. All right, number eight, energy storage production will be many multiples of the current levels right now in 2026. In other words, Lathrop will be finished, Shanghai will be finished. There will probably be at least a third, maybe a fourth. What odds do you think that energy storage will be producing let's say on the order of $50 billion a year in revenue by 2026. I think that's a no-brainer. I think it'll be way over that number, but let's just say 50 billion a year at 25% margins. You do the math. That's 12.5 billion a year, more than the total earnings of Tesla in 2023 and the expected earnings by the street in 2024. Okay, how about number 9? Companies will be licensing Tesla technology by 2026. I think that's a lower likelihood. I think they will be. I believe it's a pretty good chance. What percentage would you put on that one? You know, and by the way, if you want to put this down in the comments below, take all 10 of these and put your percentage chances by 2026. Number 10, Tesla services income will be at least 1 billion per year in 2026. Now that I'm sorry, not income. I meant by that, I meant net profit will be $1 billion per year in 2026. It's not insignificant. It'd be 1/11th, a little more than 1/11th of Tesla's current total income. By 2026 will be just services, just the services portion. That counts insurance and all the rest. All right, not all of those things have to happen by 2026, but I think there's a big percentage chance that all of those will have by 2026. And that means Tesla will be the largest company on earth if those things all happen by 2026. You might want to go, again, let me know in the comments below, just put 1 through 10, put your percentage chances, or say, you know, overall 1 through 10, I think the chances are. And then if you want to give some detail and tell me where I'm wrong or tell me where I'm right, or you know, that's great too. I love it in the comments. Please comment. All right. This is Randy Kirk. If you like what we do here on this channel, please hit like, please hit subscribe. No, really, take a minute. Just push the like button. Okay, hit subscribe, hit notify. Now, here's why you want to hit notify today. Major show coming up around 11 o'clock. Jeff Lutz will be joining me again around 11 o'clock California time, and he will be going with me. We'll be going together through the cost of goods aspect of the call. Remember, they had a 9% drop in cost of goods last year. Jeff is going to be giving us a blow by blow of what he thinks is going to happen, what I think is going to happen next year with regard to cost of goods. You are going to be shocked. And then later today, Larry Goldberg will join me on Good News Friday. That's always going to be great, especially after this week. Last night, I did an amazing program with Brad Ferguson, and you should definitely go back and check that out. I'll drop a card on that later. All right. This morning, Tasha Keeney over at ARK Invest is saying Tesla is going to be this behemoth in the AI space. It's going to be one of the greatest AI opportunities of our time. And I think to ignore it is simply wrong. So I'm excited about it. Well, I couldn't agree more and wish more people would have the rationality to see the behemoth and the AI giant coming as I do. Okay, that's from Tasha Keeney. ARK also bought a ton of Tesla at the levels yesterday. Don't know whether they bought more today. We'll see what happens. Anyway, Trueflation this morning is at 1.79, the lowest yet. And then, okay, here comes the PCE numbers. The Commerce Department Personal Consumption Expenditures Price Index for December, an important gauge for the Federal Reserve. They're number one, they say, or at least for the chairman. It increased 0.2% on the month and was up 2.9 on a yearly basis, excluding food and energy. Economists surveyed by Dow have been looking for respective increases of 0.2 and 3%. So the run rate for just 1 month is 0.2. That would be 2.4 for the year if you expand that out. But last month it was down 0.1%. And the month before that it was 0. So over the 3 months, you've got a very, very low run rate. You've got the total year now under 3%. Going on with the article, on a monthly basis, core inflation increased from 0.1 in November. However, the annual rate declined from 3.2 to 2.9, including volatile food and energy costs. In other words, the headline inflation number, that also rose 0.2 for the month and held steady at 2.6% annually. The release adds to evidence that inflation, while still elevated, is continuing to make progress lower. Elevated? The goal is 2%. It looks to me like over the last 6 months, the PCE core, which is what the chairman of the Fed has said is most important to him, looking at 6 months of core, it's at 2%. It's maybe under 2%, and the Trueflation number is under 2%. Anyway, that possibly gives the Fed a green light to start cutting interest rates later this year. I would say next week, the central bank targets 2% as a healthy annual inflation rate, and they have said repeatedly they don't want it to go below that. Markets took little notice of the data, with stock futures indicating little change at the open and Treasury yields mostly lower. Yes, the Treasury yields were down a little tiny bit, but this is correct. CNBC's got it right. We'll look in 2 seconds here and we'll see what is actually happening as the market really digests this news. As inflation drifted lower, the article goes on, as inflation drifted closer to the Fed's target, consumer spending increased 0.7%, stronger than the 0.5% estimate. Personal income growth edged lower to 0.3%, which is what the forecast was. And by the way, that is pretty darn close to what the Fed would like to see. All right. Within the inflation numbers, prices for goods declined. Can I put this in big red letters? Within the inflation numbers, prices for goods declined by 0.2%. Services prices rose by 0.3%, reversing a trend when inflation began to spike. As the pandemic forced people to stay home more, demand for goods spiked, adding to supply chain problems and exacerbating price increases. It's getting very, very hard. This is Randy now. This is me speaking. I just don't get it. I don't get the Fed's stance. I don't understand why they're not going to cut next week. It makes zero sense to me. Please let me know in the comments if you can see any reason why the Fed, after PCE over 6 months now, I think it's 8 months. I need to go back and look at that. I'll try to remember to do that before tonight's show with Larry. It's very hard to understand the Fed's stance. Clearly stated they don't want it to go below 2. All right, how about this from Business Insider? The man behind the most reliable recession indicator says the U.S. could suffer a mild downturn this year and the Federal Reserve should slash interest rates to lessen the pain ahead. Campbell Harvey, finance professor at Duke, was interning at a copper miner in the 1980s when he discovered that an inverted yield curve accurately predicts recessions. He's the guy. He recently told the Julia Roche Show the 10-year and 3-month Treasury yields inverted before 8 of the last 8 recessions with no false positives and been inverted for over a year now, way over a year, 19 months, 20 months, I think it is now. July, I think it's 20 months it's been inverted. The model is forecasting, by the way, it also, his theory shows that when it begins to uninvert, when it gets back to even is when the recession happens. The model is forecasting lower economic growth in 2024, and I believe this will be realized, Harvey said, predicting a slowdown this quarter that will continue into the summer. He suggested there wasn't a recession last year because demand was buoyed by gobs of government stimulus, as well as households tapping their pandemic savings and releasing their pent-up demand for things like shopping and traveling. Harvey also called on the Fed to end its inflation fight, as I am, arguing price growth has already normalized based on real-time housing data. The U.S. Central Bank hiked interest rates from nearly 0 to north of 5% between early 2022 and summer last year and has not lowered them since. This stuff I'm talking about to you, this is not rocket science. This is not me now. This is Harvey. This stuff that I'm talking to you about, this is not rocket science. This is really simple stuff, he said. When the Fed has done, what the Fed has done in the cycle has made things worse, so it will be fortunate to get out of this with slow growth. If the Fed gets its act together and starts to do some remedial work to try to undo some of the damage, then I do believe we have a good shot with that soft landing. It might be a shallow recession, which would be great. Well, what is the market doing after that Goldilocks reporting? I will be glad to tell you if I could find my phone. Here we go. We have got Tesla up $2.41. We have got the Dow Jones up 34, but the NASDAQ is down 48 and the S&P is down 5. Now, by the way, directionally, things have been getting better this morning. The Magnificent Seven is mostly down this morning, but by small numbers, except for NVIDIA. But NVIDIA's been rocketing up, so a little trim is not that shocking. We've got the Cathie Woods all up except for PayPal. That's a very unusual situation with PayPal. This is not a chance. This channel is not about PayPal, but if you've been watching PayPal, it's been quite a couple of weeks. All right, so the Cathie Woods. Well, now the Cathie Woods all being up would tell you what? What do we know about the Cathie Woods? When we go look at the bonds, they're going to be down. the yields are going to be down. So what we have on the bond yields is, yes, down 3 basis points, or actually 2.9 basis points, actually just changed. So we got the 10-year down 2.3. We've got the rest of the long terms also down. The 2-year is down more than that. So there's your inversion continuing to get narrower. So 4.153 and 4.349. So it's almost exactly at 20 basis points now. So getting closer and closer. He normally has been about 50. We've got the 2-month is at 5.397. So it's still way, way out there. It is actually, the yield is, have I just told you completely wrong here? What has happened here? The 10-year is up 2.3%. I'm very, very sorry. It had been down when I looked earlier, and I can't tell the difference between green and red. So I'm sorry. Everything I just said was incorrect. The yields are actually up this morning. That makes no sense at all. Okay, there you have it. With a PCE print that was as good or better than expected, the yields are up this morning. My brain just couldn't take it in. I guess that's what happened. All right, let's go on to the oil patch and see what's going on there. Well, maybe that'll be as crazy as those numbers. We have got the oil patch. We've got oil down 17 cents, insignificant. 77.19 though, overall has broken out of that trading range because, according to the things I'm reading, because there is a substantial reduction in domestic supplies. Natural gas down 148. There you go again. Natural gas though, not getting the same kind. They got a bump, but they're not getting the same kind of bump as oil. We've got gold up to 20 at 2020. That's a lot of twos. We've got copper barely, tiny bit up. We've got the dollar gaining again after the GDP data yesterday is continuing to affect the dollar and an upward, and euro dropped. The euro dropped overnight. Bitcoin is up 1,700. So finally, we've got a reversal there. I have no idea why, not going to speculate, just letting you know. All right, so let's go back and take a quick look at Tesla. Is it directionally, where are we going here? Still up 2.29. By the way, the percentage increases and decreases, we've got the Dow up 0.09, the NASDAQ up 0.20. I'm sorry, down 0.20. The S&P down 0.03. I am going to have to, I'm going to really have my eyes checked to make sure I've got the greens and the reds right. Just kidding. All right, so let's go ahead here. I did this amazing program last night with Bradford Ferguson. You should definitely go check that out. We went through all 4 different aspects of the potential earnings for 2024, and we found about $8 billion in potential earnings for 2024 that nobody's talking about. I mean, no one is talking about. Are these flights of fantasy from Randy Kirk? No, these are things like the IRA money and like the energy increase, the increases in deployment, which were clearly spelled out in the call. So there's 4 of these, and together they add up to about $4 billion. I mean, about $8 billion. Now, on one of those, which is cost of goods, I'm going to have our top guy in the community, Jeff Lutz, is going to join me at 11. Oh, by the way, I'm going to put a card up right here for that Brad Ferguson call from last night. And then Jeff Lutz and I are going to take apart the cost of goods item line by line from the call. And Jeff is going to show me what's going on with regard to a potential substantial decrease in cost of goods next year. And then, of course, Larry Goldberg will be around 4 o'clock today. All right, please hit like, please hit subscribe, please hit notify. You want to be notified of those 2 programs coming up today, and then, buy a Cybertruck bottle opener, R2, R5, or 10, and join Patreon. All those things would be really helpful to the channel. All right, last chance, one more time, as we always do on Tesla. It is now up 2.96. So directionally, we are headed this way. Not bad. Yeah, from a pretty good low. All right. Oh, let me know in the comments below. If you're still with me, let me know in the comments below. Did you buy? Did you sell? What did you do yesterday? What are you going to do? Or what are you thinking about doing? That'd be great information. I think everybody would enjoy hearing from you. I'm just standing pat. No more, no less, just the same as yesterday. All right. It's been great talking to you.